Hi, I'm Danny Ecker with your Chicago Business Today midday report. Northern Trust stock took a dip this morning on news that it's cutting 700 jobs worldwide this year. A spokesman for Chicago's biggest locally headquartered bank said half of those cuts have already taken place, all in Europe, but didn't say how many will be cut in Chicago. The bank has an Illinois workforce of about 14,000 employees. In its fourth quarter earnings release, Northern Trust said its cost cut program would be a $250 million pre-tax boost by the end of 2013. The bank posted earnings of about $130 million last quarter, down from almost $160 million year over year. It's Northern's deepest cost-cutting program since 2003, when it laid off hundreds following post-9/11 stock market troubles. Elsewhere on the job cut front, Takeda Pharmaceutical Company will eliminate 150 jobs in the Chicago area. It's part of the company's goal of cutting 10% of its workforce by 2016. Takeda's North American headquarters is based in Deerfield, though not all the local cuts will be at that office. The firm says the Chicago moves will mostly be in sales and office support positions. Of course, Takeda and Northern Trust are the latest in a series of job cut announcements just in the last 2 weeks from major local employers, including Kraft and Archer Daniels Midland, cutting 1,600 and 1,000 jobs apiece. Well, the Chicago manufacturing sector could get a big boost under a new proposed city ordinance. Mayor Emanuel is submitting a Chicago First plan to City Hall today that would give Chicago-based firms a 2% break on bids to win city contracts. It's a law that already applies to construction contracts and would count for all city purchasing. Right now, about half of the $2 billion the city awards in contracts each year goes to non-Chicago companies. Manufacturing in the Chicago metro area generates about $50 billion in collective revenue each year. And Republic Bank of Chicago has filed a $20 million foreclosure suit against the owners of a prime Michigan Avenue development site. A venture led by two local developers had planned to open a new Marriott Edition hotel, but dropped the idea amid the recession in 2009. It's another sign that developers continue to struggle to pay back construction and land loans made before the crash, though problem loans are declining. According to real estate research firm TREP, the delinquency rate on such loans made by banks fell to 22% in the third quarter, down from a 28% peak earlier in the year. And that's what's happening in Chicago business today. Stick with chicagobusiness.com for more breaking business headlines. Thanks for watching. We'll see you tomorrow.